Okay guys, so today we're going to learn a little bit about the preparing an income statement and I think a balance one as well. So we're going to start with preparing this income statement. It says Carmen Camry operates a consulting firm called Help Today, which began operations on December 1st. On December 31st, the company record shows the following selected accounts and amounts for the month of December. So in order to prepare this income statement, we're going to start with for the month of December 31st, and then we're going to go and add the revenues, and we're going to look at the revenues, and they are consulting revenue. Oh, not that one. It's delivery. Consulting revenue for this problem is 26,880, and that it will give us our total revenues. Then we will look down and prepare the expenses parts. Can't find it. I think I clicked the wrong one. It's this one. So we're going to look at all the expenses. So right here, we will see that the expenses are rent, salaries, telephone, and miscellaneous. And so we're going to put those on our income statement. I'm going to look for rent expense, which is 9,390. And then we're going to look for the salaries expense. Right there. And that is 5,450. The telephone expense, that one is 690. And then we have a miscellaneous expense. And that is 390. So those will all be the expenses for the income statement. At the end, you want to get the net income, which you will do by subtracting the total expenses from the revenue. And that net income is going to be 10,960. Oops, I didn't put it in there. 10,960. There it is. And so that is the income statement. Now we're going to go and move forward to the statement of retained earnings, and we're going to do the same thing. We're going to do for month ended in December 31st. Don't forget to add this part because you lose points. And then we have the retained earnings for December 1st, and then it says right here it was $0, and then the net income of December is 10,960. So we're going to add that. And that net income, since all these problems are tied together, it goes back to the previous one, and you will see it right here, the net income at the bottom, 10,960. So we're going back here, and now we're gonna do less the dividends, because this is a statement of retained earnings, so it shows everything that we're getting here. Dividends are 5,830. And then the last thing we do is just say retained earnings for December 31st. And that should give you the statement of retained earnings. Then we're going to move on to the preparing the balance sheet. So a balance sheet has three parts, and the first part is the assets. The second part will be the liabilities right here. And then the third part is going to be equity. So assets are anything that have money value, or that basically the owner owns. So we're going to start with cash, which is an asset. and that is 25,200. And then we're going to move on to another asset, which is accounts receivable. And accounts receivable is 22,240. And then the next one would be office supplies. So office supplies are an asset until they are used up. So 5,880. And then we're going to move on to office equipment, which is also an asset until it is used up. So when you use up equipment, it's called depreciation and you just expense it. Where is it? 19,860. Okay. And so then we have the last one, which is land. And that is always an asset. Land is 43,890. So those will all be your assets, and it totals 1,270. And so this would just be total assets. That's what you put. Liabilities are things that the company owes, so like accounts payable. Right here, there's no other liabilities. So accounts payable will be the only one, and it is 10,840. You can see we're getting everything off this little chart right here that is given to us. So equity. Equity is common stock, and it's also retained earnings. So retained earnings, we're going to get it from the previous sheet. So common stock right now, it is 100,300. I think that's how you say it. And retained earnings is, so right here, 5,130. And so, as you can see, total assets will always equal total liabilities and equity. So they will always equal. If they don't equal, then you did something wrong or something is off on this sheet. You can't see my finger pointing. So this sheet. So that is all. I really don't know how to explain things very well. So I hopefully this helped a little. If you have any questions, just reach out. I would try my best to, explain it. I don't know definitions at the top of my head, but I just know that liabilities is things that, the company owes. Equity is, I don't know how to explain that. Equity is just like, assets equals liabilities plus revenues plus common stock minus expenses and minus dividends. That's all I know. And assets are, things that the company owns and is getting money from. So like the land is something that they can build upon and then, have their equipment there and all these things. So that's basically it for this video. And sorry about my hand. I just have a neck problem today. So thank you. Have a nice day.